Welcome to the Keiser Report. I'm Max Keiser. Bubble, bubble, toil and trouble, bonds burn and prices double. The eye of newt and toe of frog, will of bat and tongue of dog cost more than you can afford. So, Stacy, am I getting this correct? But the witch's brew is costing more due to economic dislocations and stealth inflation?
Well, yes, Max. The central banking witches have been brewing up a cauldron of disaster for everybody. Here, of course, in the UK with Mark Carney, we have house prices rising by £685 a day. That's $1,100 per day for London house prices. In America, we have record beef prices. The USDA, the U.S. Department of Agriculture, has actually issued a warning saying that meat prices are rising so rapidly. And in Europe, with Draghi, we've had, of course, negative interest rates on deposit now. So I have this tweet, Bild headline right now, shuddering before the ECB bomb. Savings gets even harder.
This new negative interest rates from Mario Draghi and the European Central Bank. It's the wrong prescription, basically, because the problem is that banks are loaded with too much toxic debt, both the central bank and the other banks in Eurozone. So the idea of transferring the bad debts to the ECB, which is what they're talking about, and doing so on the cheap by lowering rates even more and introducing even negative interest rates, it just keeps the zombie banks like Deutsche Bank, for example, with the $900 trillion in credit default swaps and other derivatives. Deutsche Bank should be allowed to not be kept alive with cheap rates. It should allowed to go bankrupt because it is technically insolvent. So Mario Draghi is just basically, and by the way, this move by the European Central Bank is, through the connections to the global banking system, a continuation of quantitative easing in America. So there's no tapering. Tapering is a misnomer. There is no tapering. The asset purchases and quantitative easing on a global basis continue to expand.
Well, the markets themselves were very not happy because they want the ECB to announce asset purchases. What this does, the negative deposit rate is the excess reserves at the European banks. They store it at the ECB, and the ECB is now charging them, therefore making gold look much more attractive because you're starting to be at the same cost of storing gold. So why not just store gold in a facility and watch it rise? But the other thing is it's not an issue of supply. They're saying that if we charge you to deposit your excess reserves at the European Central Bank, it'll encourage you to lend more. But on the other hand, all the national governments, and including the European Commission and the ECB and the Troika, they're all pushing austerity on everybody. So there's a lack of demand. People are unemployed. There's no, if you're in Greece and you look around you, you see everybody unemployed. You see a 40% cut to the healthcare budget. So I don't understand. It's about demand. You have to put money into the hands of the people.
Well, the idea that there's a surplus on the balance sheets of these banks is a misnomer. When banks lend to each other, they create debits in other banks who would then lend those debits to other banks. And so they're increasing the indebtedness of the banks. There's no surplus like there's capital that's been deposited as a result of savings and economic activity. There's more debt. So what they're going to do, and this is what I predict, is that by raising the cost of keeping all their debts on the books, these banks like Deutsche Bank and others in Europe, Societe Generale, BNP, and then banks around the world, to offset that increase in the cost of carrying these bad debts, will take even riskier bets. There'll be more manipulation, more fraud, more gold market manipulation, more LIBOR manipulation, more Forex manipulation, more index manipulation, more VIX, the volatility index manipulation. So they'll increase manipulation, they'll increase fraud. All the big four majoring accounting firms like KPMG, Ernst & Young, PricewaterhouseCoopers, KPMG will issue statements saying this fraud is good. We give it a AAA rating. They'll sell bonds against it, and the rating agencies will give it a AAA rating. And this massive fraud, the only thing that's changing is that the European Central Bank was the last bank in the world to go from having, let's say, less than $500 billion of bad debts on its books. They're now going to go to 15 to 20 trillion euros of bad debts on their books as a way to keep global quantitative easing going. The risks are going to be higher. And two things. A, their top 1/10 of 1%, this is a massive giveaway to them because massive manipulation is unpunished. And the austerity and the suffering of the lower 99.99% will become even more pronounced. This is increasing the risk of social unrest, and not a moment too soon.
Well, we're facing a deflationary spiral in certain parts of the world because of all those bad debts and because of the worship of capital at the expense of cursing the human being in the equation, the labor, the people who work and create wealth for a living. And so I want to look at this tweet also this week from Upshot of New York Times. They said poverty used to fall when the economy grew, no longer. So from 1959 to 1973, growth in per capita gross domestic product translated directly into fewer Americans living in poverty. If that relationship had continued, there would have been no poverty in the United States since the mid-1980s. Instead, the poverty rate has held steady in recent decades despite overall economic growth. And you could see the chart. The line on the bottom is a simulated poverty rate if it had stayed constant. Line on the top is the actual poverty rate. And as you can see, it was right after Nixon took the United States off the gold standard so the whole world went off the gold standard, and there was no tethering to any sort of sense of value, and all we had was the witch's brew. The witches came out, they started running the central banks around the world right at that chart where poverty stayed the same, wealth was expanding, or certainly the rich were expanding their balance sheets. But since the witch's brew of the central banks came in, we've seen this sort of increase.
Well, GDP is collapsing faster than the rate of debt is expanding. So the result for the poverty-stricken in the world is not deflation, but inflation. And that's the irony of this entire debt-based economy. And you could look at it this way. For the top 1% who can borrow money at close to zero, for them to borrow $1 million, it costs maybe $1,000 in interest. For people, the average person, to borrow $10,000 at a rate of 10%, they're going to spend the same $1,000 a year in interest. So the prices for somebody who's not able to borrow money at close to zero are 100 times greater. 100 times greater than those who can borrow money at close to zero. And since it's all debt-based, you have to look at it in those terms. You can't look at it in terms of capital formation, savings, growth, GDP growth, actual CPI growth. And none of those exist anymore. It's all debt-based. All the ECB is doing now is expanding the debt to become planet debt.
Also this week, the numbers came out that 52% of Americans can't even afford their homes. So they're actually having to take on second, third jobs. They're having to cut back on food in order to pay for their mortgage or their rent. But the other thing about this global debt bubble, and no negative rates.
Because the mortgage rate on that home is going to be, they're going to pay 5 or 6% or 7% on the mortgage rate. The person is repackaging that loan and selling it off to the global wholesale market in those looking for yield, like a sovereign wealth fund. Their cost of funds is less than 1/100th or 1/1000th of a percent. That's the interest rate apartheid right there.
Exactly. We've talked about that many times, but I want to talk about another headline here, the final one here, and that is about what the underlying collateral has disappeared. It's not there. It's all fraud. And we see that in this headline, China scrambling after discovering thousands of tons of rehypothecated copper, aluminum missing. The rehypothecated catastrophe appears to be gathering speed as China's northeastern port of Qingdao has halted shipments of aluminum and copper due to an investigation by authorities after they found, quote, there is a discrepancy in metal that should be there and metal that is actually there. So apparently people are scrambling with their little ticket saying they own this metal, but in fact, it's been rehypothecated many times over. In many cases, they're saying it's been sold 3 or 4 times to other banks and is used as the same collateral for various loans. Most of the loans, of course, being used to buy like these properties right behind us here.
Okay, so instead of the old joke, no ticky, no shirty, here it's you've got a ticky, but we have no shirty.
Yeah.
So it's, you got all the tickets in the world, you have all the claims in the world, but we got nothing in the warehouse because we've been rehypothecating that. We've been using it to collateralize the loan 100 times over again. And our cost of doing that is near 0% because we're kleptocrats and we're financial T-words.
So a source at the port that has been closed down told Reuters this. We hear the discrepancy is 80,000 tons of aluminum and 20,000 tons of copper, but we hear that the volumes will actually be higher. It's either missing or it was never there. There have been triple issuing of documentation, the triple witching.
Yeah, exactly. So again, going back to the top of the show, the price of ingredients for performing hexes and spells and witches kind of voodoo magic is going up. You
What
know,
is infinite rehypothecation but a spell that bankers cast upon the financial system?
I mean, think about the poor Haitian voodoo doctor, witch doctors and whatnot. I mean, the basic cost of being a witch doctor is going up. You can't even get a decent witch doctor these days because the cost of eye of newt and heart of dog is just skyrocketing versus the cost of funds, which are near 0% if you're on the right side of the interest rate apartheid wall.
So what they have here in China, why they have been using this metal, is they say that metal imports have been partly driven in China as a means to raise finance, where traders can pledge metal as collateral to obtain better terms. In some cases, the same shipment can be pledged to more than one bank, fueling hot money inflows and spurring a clampdown by Chinese authorities. So again, I keep on coming back to this. It's like a witch's brew of all those crazy things like dog's tail and eye of newt being thrown into this cauldron that we call our global economy. And all of it looks gross when you really examine it closely before you consume it.
Well, it's fractional reserve banking. It goes back to the goldsmiths, back in the medieval days. They would create more claims for people to use as money than they had gold in their vaults. That was the original fractional reserve gold standard, and banks picked up on that, and they started to make more loans than they had deposits on the bank. And that became the derivatives market, where you've got a quadrillion worth of derivatives trading on banks that ostensibly have nothing left in the vaults at all, except maybe a Gordon Brown used colostomy bag. I mean, that's about all they might have. Meanwhile, in China, they're using the same frickin' model for the aluminum market and the copper market. So they're selling claims all over the place, like medieval goldsmiths, to these poor schmalolas, out there trying to eat a decent, Chinese pork bun. And they go down to the warehouse to get their aluminum, and it's nothing but, chicken feathers. Our friend Plucky, the chicken, he's got more feathers than they've got copper in these warehouses based on these claims that have been sold 100 times, 1,000 times. Again, it's all tickies, no shirties. Forget your shirties. Shirties all gone now. Go somewhere else. Go down to Barney's and borrow $1 million to buy a new shirt because the shirt you thought you had there is gone.
Yeah, but at the end of the day, finally, they could take negative rates down to a negative 100%, right? And the fact is, the collateral's all missing. It's all been miscategorized in this cauldron of witch's brew. We're going to have to restart, I think, from the beginning.
We need better witches. I think that's what we need. Better witches. This current crop, Mark Carney and the rest, they couldn't cast a spell to whip them way out of a paper bag.
We need the Wizard of Oz, right?
We need something. Well, we got to go now. So adios.
See you later, Max.
Stay tuned for the second half. A whole lot more. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Alasdair Macleod of goldmoney.com, which incidentally now takes Bitcoin and stores Bitcoin. Thank God for goldmoney.com. Alasdair, welcome back to the Keiser Report.
Thank you, Max. Just don't ask me about Bitcoin. It's
Okay,
not my
fair
department.
enough. Alasdair, I want to pick it up where we left it last time, because last time you were on the show, we were talking about the Shanghai Cooperation Organization. We have China, Russia, Iran. They created a new trading zone. Since you were on, a $400 billion gas deal signed between Russia and China. Does this basically what you're talking about? More of this type of thing? Tell us.
Oh, precisely. And one of the main points about the Shanghai Cooperation Organization is cross-border infrastructure projects. And before, I think I mentioned hydroelectricity from Siberia to China, water from Siberia to China. And I suspect in the fullness of time, there may even be water from Burma to China. So these infrastructure projects are going to happen all the time. And I would have thought that this gas deal is probably the first of several in the pipeline.
Yeah, and there's other countries in the region, in this bigger region, now wanted to join this group. And it has the potential to be bigger than the Eurozone trade area, right?
Completely. I found an analogy which amused me a bit, and that is Genghis Khan, back in 1250, basically went from the Bering Straits to the gates of Jerusalem. And that roughly, I think, is going to be the Shanghai Cooperation Organization's trade area. It is enormous, and it includes about 4 billion people, particularly if you include the non-aligned, or maybe the American-aligned countries in Southeast Asia, such as Thailand, Vietnam, and Indonesia, and the Philippines, because there is a very big Chinese element in those countries. And I think quite naturally they will gravitate towards the SCO. And here is another thought. We know that there's problems with disputes, territorial disputes in the South China Sea. With Vietnam, that's ongoing at the moment. There's also been with the Philippines, there's also been with Japan. I suspect the subtext in this is that someone at a very senior level in China will talk to someone in a very senior level, say in the Philippines or Vietnam or whatever it is, and say, well, if you come into the SCO, the Shanghai Cooperation Organization, then we will have no basis for dispute.
Right.
In other words, what they want to do, I think, is to remove the Southeast Asian countries from American influence so that that can come into the trading bloc.
How much of a threat is this to the dollar? Because talking to or listening to Jim Rickert, who's written a couple of best-selling books recently, Death of Money and Currency Wars, he was saying that the dollar is going to be unchallenged going forward because of the depth one needs for the bond markets and the forex markets. There's too much infrastructure relating to the dollar, and that everything trades into dollars. And it just seems to me that's a view that might be 50 or 60 years outdated, given the recent developments in technology, et cetera. Your thoughts?
I think what we have to do is to draw a distinction between a reserve currency and a currency used for settlement of trade. The Chinese currency is now being used increasingly, even by American companies, to settle trade with China. And the whole reason that China has set up this twin nexus of Hong Kong and London is to improve, using derivatives and all the rest of it, to improve the liquidity of the currency so that when the currency flows back, the sellers, in other words, people who have taken Chinese yuan as part of a trade deal, know that they can get rid of it in the market for whatever currency they want. So I think that the dollar will remain as the reserve currency, but its influence within the Asian continent, I think, is diminishing and will continue to diminish to the point where, as far as the Chinese and the Russians are concerned, it really doesn't matter.
Okay, I want to stick on this currency theme for a second. I have a friend in Mexico, Hugo Salinas Price,
Indeed.
who's a big billionaire type. We've had the pleasure of meeting up with him. He's been a guest on this show a couple of times.
He's a good man.
Last time I was on television talking about this gas deal and the pricing of the gas, he quickly fired off an email to me suggesting that one of the reasons why there was not so much transparency on the pricing of what the cubic dollar per cubic 1,000 cubic feet would be is that behind the scenes there's a potential to at some point include gold, and that these trades would be settled in gold. I would have to classify this as a bit on gossip side, but since you rub elbows with these guys, any thought on this gossip?
Yes, absolutely. I think that the Chinese and the Russians have a very different view on currency than we do. They are not Keynesians. I mean, all this Keynesian stuff passed them by when they were sort of wedded to the Marxist creed. They have come into the world, the new world, the whole world, as it were, as business-driven countries, which is very unlike us. We're welfare-driven. They're business-driven. So they really do care about the quality of the currency that they receive in return for their exports. And for this reason, I think gold is going to be extremely important to them.
Okay, let me ask you this about this statement. President Vladimir Putin recently said, quote, Russia and China need to secure their gold and foreign reserves. So this is part of this, correct?
It is precisely that. And if you think about the statement, the one thing you cannot secure are the foreign currency element of reserves, simply because those exist as credits at central banks beyond your control. The only thing you can control is gold itself, by having it in your own possession. And it's interesting that in that comment he stated that both Russia and China, now I don't know if he's speaking beyond his brief with respect to China, but I feel pretty sure that he is speaking in one accord with China with respect to gold. And that I think is interesting, and I think it went completely over the heads of most of the commentators who just sort of reported it for what it's worth.
Okay, so let's just review again. Why is China accumulating gold, and just flesh that out a little bit more, because you have been writing about that recently. There's some other details to the story. Continue.
Well, gold for Asians is true money. Currency is government money, and they really do understand the difference. We don't know what gold is anymore in the West. We sort of think it's something from the past, and we've evolved beyond that. We don't need it anymore. But that's not how they view it in Asia. They do view gold as the ultimate currency, and that basically is what they want. And what's interesting is the way that China, in particular, has promoted gold amongst its own people. So what that tells me is that China as a state, I'm not just talking about the declared monetary gold on the central bank's balance sheet, but as a state, I think she has got as much gold as she really wants and access to even more gold through her own mines and through scrap supply.
Let me ask you, how stupid is Ecuador? They're going to work with Goldman Sachs to dump their gold for paper. That just hit the tape last week. Okay, I mean, to me, is that the brazen example of financial idiocy? Are they taking drugs in Ecuador? What's the problem?
They may well be. I mean, to me, it is completely nonsensical. I mean, either they are really desperate, or they have fallen for the sales pitch from an investment banker.
I mean, how many countries are going to fall for the Goldman Sachs salesman? Well, Greece? They sold Greece on killing their own economy. They sold the Eurozone on killing their own. They killed Ireland. Now they're going to kill Ecuador. They're financial assassins. If you see a Goldman Sachs banker show up with a briefcase, get out your bazookas and take him out. He's not there to help you. He's there to steal stuff. So they're stealing their gold for nothing.
I would have thought at least the due diligence that Ecuador should have done is actually to check out with a few finance ministers.
Well, check with Julian Assange. He'll tell you. I mean, you got to pipe, the hotline to Julian. He'll, give you the inside dope. All right. Well, let's talk about gold some more, because what the Gold Antitrust Action Committee, GETA, has been telling us for years. Over there, Chris Powell and it's Bill Murphy. Is it Murphy?
Yes,
Bill
it is,
Murphy.
indeed.
Yes. That Barclays and other banks are manipulating gold, and now finally Barclays had to admit, and it's come out that they are in fact manipulating gold. Speak about it.
Yes, I mean it's the Financial Conduct Authority apparently examined all the dealings in Barclays from 2004 through to 2013. And came up with one instance which they fined Barclays for and fined the trader involved and banned him from dealing in the City of London. I find it extraordinary that they've found only one instance at Barclays over the last since
it's
2004,
institutionalized fraud. It's
2013.
institutionalized fraud. It's whether Societe Generale, the James Carville case, or it's Goldman, invading Ecuador. Banks are involved in institutional fraud. Barclays is part of it. They manipulate the gold prices. And the language that they use, the mini pukes, that describes naked short selling of paper contracts to keep the gold price down so that they can. So Ecuador is stupid enough to think that by trading their gold for paper, they're going to be in an advantageous position. That's a massive fraud. So they're going to blame one trader. But would it be fair to say that across the board, the CEO, the chairman, the board of directors, and every executive at Barclays is complicit in massive fraud?
Well, I think that's probably going a little too far. But what I would say is that given the manipulation of LIBOR, given the, I think so far, suspected manipulation of currencies, it would be extremely unlikely if gold wasn't manipulated as well. But the problem with gold is that the central banks are also involved, because they supply the physical leased gold to provide liquidity into the market. And the central banks have a problem because they declare that they have got so much monetary gold, but they don't actually declare how much of it has gone AWOL and is no longer under their control. So this is a problem for them.
Is this why Germany can't get its gold from Bank of England? When they said they wanted their gold back, and England said, well, maybe over 7 years' time. Is it because they don't have it, they sold it to Asians, and they're lying?
To be fair to the Bank of England, the problem was more with the United States. It was the US Fed that came to an agreement, we are told, to return, I think it was something like 360 tons, or whatever the figure was, of their 1,500 tons. So we're talking about a small amount out of the total over a period of 7 or 8 years. And so far in year one, they managed to deliver only 5 tons.
Okay, but they're part and parcel the same.
If I'd been the Fed and I was sort of trying to, run the gold market, and there were people like me out there saying, well, they haven't got the gold and all the rest of it, and I'm refusing to do an audit for whatever reason, I think I would have dressed up the numbers a bit more than 5 tons. So it does actually make me really quite suspicious as to what the true position is.
But I saw a big photo of the Queen roaming around the warehouses of gold in London, in the basements of London. I mean, I'm sure that the Queen wouldn't be drawn into a massive fraud. I mean, that's the Queen, Queen Elizabeth.
No, I think I would say of the Bank of England that the officials in the Bank of England are unlikely, I think very unlikely, to be involved in fraud. What they would do is maybe
They were involved in the LIBOR fraud. You couldn't do LIBOR fraud without the Mark Carney and his predecessor.
Well, what we have in that case is there is a little bit of a dispute over minutes from whatever committee it is as to whether the Bank of England actually
Yeah,
knew
there's
or
no
not.
dispute. I've looked at the evidence myself, but I can tell you without equivocation that the Bank of England's involved in a massive LIBOR fraud, as they are with the gold fraud, as they are with the economic fraud, as they are with the global financial fraud.
But Max,
We have 10 seconds left.
Coming back to the gold situation, I think what is more likely is they will say to central banks like the Finnish central bank, either you pay an awful lot of money to us for us to store your gold, or alternatively, we've got a deal for you. We can lease your gold and you can earn some money on it. How does that suit you? And 9 times out of 10, they fall for it.
Alasdair Macleod, we're out of time. Thanks so much for being once again on the Keiser Report.
That's my pleasure. Thank you, Max.
All right, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Alasdair Macleod of goldmoney.com, now accepting Bitcoin. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.